Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special series of reports on the 11 megatrends of 2008. Megatrend number 5, the biggest fall in global stock markets since 1931. 2008 was an horrendous year on stock markets. The Dow Jones Industrial Average has fallen 44% in the last year. The S&P 500, which is a much broader range of stocks on the US market, fell 51% in the single year. Now that's not quite as bad as what we saw in 1931, 1932, when over a 36-month period, a year and a half, the market fell 88% as the world was slumping into the worst depression in its history. Now, it is the worst since the Depression, but it's not quite as bad yet. And it's worth looking at what's happened over the last year to trigger the big falls on markets. Firstly, the market was horribly overvalued, pumped up by a lot of debt from big leveraged investors, many hedge funds, private equity buyouts, a lot of margin lending. And the first problems started to emerge in the middle of last year, around July, August, when Bear Stearns announced that some of its subprime mortgages were behind on their payments. We then saw a cascading effect as subprime mortgages started going bad all over America, and then the assets on top of those started to implode. Over the following 12 months, we saw the collapses of Bear Stearns, Lehman Brothers, AIG, Northern Rock, Bradford and Brinkley, Fortis. We saw the forced rescues of Merrill Lynch, Wachovia, the nationalisations of Royal Bank of Scotland, Lloyds TSB, Goldman Sachs, Bank of America. The list goes on. Then we saw the collapse of hedge funds as people in panic mode pulled their money out of these hedge funds. That helped accelerate the fall in the oil price and saw mass forced sales of stocks and bonds. It all culminated in the Bernard Madoff fraud, the extraordinary $50 billion loss in one fund that was unregulated, unregistered and audited by two guys in a small office in the suburbs of New York. So, over that period, we saw the financial sector implode on stock markets in terms of their value. We saw the collapse of the oil price, and by the middle of this year, we were starting to see the effects on financial markets transfer through into the real economy, mostly because of the credit crunch, as banks refused to lend to each other and to their customers, drying up credit in the global economy. That started to hit earnings for companies across the board, so the grief spread from not just the financials but into the industrial sector. The oil price collapse that hit the oil companies, and then we started to see the developing economies of China and India be hit, and that has really hit earnings for those who are dependent on world trade. So where to from here? Well, predictions are all over the place. Some think we could see a fall as big as what we saw in 1931, 1932. That would mean stock markets halve again in the next year or so. Others say we have hit the bottom and we're looking for a rebound. But who knows? I wouldn't want to be betting on it. What does it mean for us here, though, in New Zealand? Well, because funds are so short internationally and investors are so nervous, it's been tough for our banks to refinance their foreign debts, and the Reserve Bank has had to help them out with government guarantees and also with lending in its own regard. Also, the New Zealand Superannuation Fund, or the Cullen Fund as many of us know it, it has lost 21% of its value in October and November. That means more than $2 billion worth of taxpayers' money has gone down the drains of the world's stock and bond markets. Big question though, is this a prelude to a bigger fall? Are we going to see the same collapse as we saw in 1931, 1932, ahead of the Depression? I don't think so. We've got, for example, Ben Bernanke, the chairman of the Federal Reserve, a guy as everyone calls Helicopter Ben, because he's said in the past that when markets are heading for depression-like events, the best way to fix it is to fly over the top of it with a big helicopter and dump money out, spreading it over everyone to help reflate economies. We're also seeing heavy government injections of funding, unlike what we saw in 1930-31, when the US government and the central bank there essentially retracted, went into its shell, and that helped accelerate the falls on markets and in the economies. Barack Obama is about to schedule a $1 trillion bailout plan, and we've seen the most bailouts of companies in the history of the world. So, maybe it won't be as bad as 1931, 1932, but it's been a hell of a year. There we have it, the fifth megatrend of 2008, the biggest stock market fall since 1931. I'm Bernard Hickey, in association with ASB.